Hey there, you're watching Success Wave. This video is about 2020 stock market crash. If you don't want to miss out our videos, please subscribe to our channel and hit the notification bell to get notified every time we post new videos. The 2020 stock market crash was related to the coronavirus pandemic that spread from China in late December and early January to much of the world in February and March. In order to mitigate the spread of the virus, large parts of the economy were shut down, especially in travel-related industries. This led to enormous stock market volatility starting in late February. The 2020 stock market crash was mostly caused by the spreading coronavirus pandemic from China into the rest of the world, and the economic shutdown that occurred as governments attempted to battle the spread of the virus. In the beginning, travel, airlines, and cruise lines were shut down, but as the virus spread, county, state, and even country-level shutdowns occurred of non-essential businesses. 2020 market crash timeline. February 19, 2020. The S&P 500 hits its all-time high of 3,393.52 late February. The early correction. With the coronavirus spreading, stocks began dropping in late February. The situation was exacerbated by the price of oil plummeting, with enormous oil supply and production still online and demand dropping due to the shutdowns in China as they fought the spread of the virus. OPEC members failed to reach an agreement to reduce production. This caused the price of oil to see very heavy drops. As cruises began getting cancelled, air travel began getting restricted, and now energy companies being put under major pressure with very low oil prices, more parts of the US economy began getting hit. End of February. The S&P 500 closes February at 2,954.22, down nearly 13% from its all-time high on February 19th. March 3, 2020. The Federal Reserve announces a 50 basis point cut in the federal funds rate during an emergency meeting. March 15, 2020. The Federal Reserve cuts interest rates effectively to zero by lowering the federal fund rates to its zero bound. The Fed also relaunches quantitative easing in an attempt to ease credit market concerns and provide ongoing liquidity into the markets. Middle of March. The stock market saw unprecedented volatility, with the Dow Jones Industrial Average seeing regular moves of 1,000 points in both directions. The stock market saw the greatest single-day drop on a percentage basis since the 1987 stock market crash, only to seemingly have an even bigger drop a few days later. On March 24, 2020, the Dow Jones Industrial Average posted a 2,112-point gain, its largest ever, on the hopes of a pending massive stimulus bill from the federal government. March 26, 2020. Initial unemployment claims surged to 3.283 million for the week ending March 21, 2020. The previous record was 695,000, so this jump in claims was an unprecedented increase, indicative of the severity of the economic shutdown as a result of the coronavirus pandemic. Coronavirus timeline. The coronavirus epidemic of 2020 is largely responsible for the 2020 stock market crash. While growth was slowing somewhat in the United States at the end of 2019, most economists view United States economy as reasonable, strong, and healthy. As the coronavirus spread to all parts of the world, including the United States, governments had to take action to combat the spread of the virus. These actions had a tremendous impact to the economy and was largely the trigger for the 2020 stock market crash. Since the coronavirus is so central to the 2020 crash, let's outline the coronavirus timeline here. Late December 2019, the first news of a virus in Wuhan, China is reported. January 11, 2020, China reported its first death from the new Wuhan virus. January 20, 2020, the first case in the United States is reported, a man in Washington state who had recently traveled to Wuhan, China. January 23, 2020, China cuts off and locks down Wuhan in an attempt to limit the spread of the virus. January 31, 2020, President Trump restricts travel from China to the United States. February 21, 2020, a coronavirus outbreak begins in South Korea, largely tied to an outbreak within a church that has ties to China. February 23, 2020, Italy sees a surge in coronavirus cases. February 29, 2020, the United States has its first coronavirus-related death. March 11, 2020, minutes before an NBA game was about to begin, Utah Jazz's Rudy Gobert was confirmed to have the virus. Within minutes, the NBA suspends its season. This is a very important moment as it is considered to be the moment when the coronavirus got real for a majority of Americans. After the NBA announcement, shutdowns accelerated across many parts of life. March 11, 2020, President Trump blocks most visitors from Europe. March 13, 2020, President Trump declares a national emergency. March 15, 2020, the CDC recommends no gatherings of 50 or more people. March 19, 2020, the United States has more than 10,000 active coronavirus cases. March 22, 2020, the New York Times says that New York City is now the epicenter of the coronavirus epidemic, accounting for approximately 5% of the world's cases. March 24, 2020, the United States has more than 50,000 active coronavirus cases. 2020 recession. At the time of the stock market crash, the United States economy had not yet entered a recession, though it's worth noting that recessions are identified after the fact when economic data is released. As of late March, most economists assumed that the United States is in fact in a recession, despite the fact that the public will not know that it was a recession until the data comes out later. Why does a stock market crash indicate, predict, or cause a recession? There are a number of factors. First, the stock market crashing is often looking ahead to economic realities. While not perfectly accurate, the market can often predict well the onset of a recession. By looking forward to collapsing corporate profits caused by unemployment and lower spending both at the consumer and business levels, the stock market can predict a recession by its falling values. Moreover, a stock market can help cause a recession by what's known as the wealth effect. Just as rising stock market prices and 401k account balances can make consumers feel wealthier and thus spend more money, the opposite can hold true as well. When individuals see the declines in their investment accounts, it can make them hold on to their cash more, which then hurts businesses and economy. Due to the nature of the 2020 stock market crash, will undoubtedly experience a severe recession. The stock market crash was to a large degree caused by the massive economic shutdown that was needed to combat the spreading coronavirus. This same shutdown is going to result in a major drop in economic activity and negative economy growth for at least a quarter or two. By late March, most economists viewed the 2020 recession as inevitable. If you have lost money in March market crash, don't repeat the mistake. Warren Buffett says that market crash is an opportunity to buy. If you are prepared for a crash, you can make money from it. Follow this 3-step strategy in a market crash. First, don't panic and sell. Even your most profitable investment will fall in a crash. This doesn't mean you sell your money-making instrument. Second, stay invested in the good stocks that have been giving you handsome returns for years. Third, keep cash ready and buy fundamentally strong stocks in a dip. In a market crash, all types of stocks fall, even if they have strong growth potential. This gives you a window of opportunity to buy a good stock at a discounted price. Think of it like the end of a season sale where you get the same product at 20 to 30% discount. That's it for this video. Do you think 2020 was a bad luck year for the stock market? Let us know in the comment box. See you in the next video. Until then, goodbye.